Benoit, welcome to SuperInvestor. Thank you so much for joining us.
Thank you.
Extraordinary times.
Yeah.
This time last year, people were saying it's been really interesting, and little did we know it was going to become much more interesting. What would you say about the state of the industry and how it copes with the world we live in today?
Well, if you take a look globally on the private equity asset class, it's definitely a very interesting asset class where it has been able to demonstrate that it's a resilient market, and when it's properly done, you can target very interesting return with a risk profile still okay for the investors. So definitely a very strong market, especially in a market where it's difficult to find good returns. So I think the private equity as a whole has been quite active. Now if you take a look on the secondary market itself, again, linked to the evolution of the private equity, linked to the fact that now we speak about 2 or 3 trillion in private equity, definitely attached to the evolution of the private equity market, you have a mature secondary market where every year you can deal with 30 to 40 billion of deal flow. And in this deal flow, you can find, again, good quality transaction where you can assess the quality, you can assess the maturity, and then you can provide liquidity to many investors in the private equity industry.
You described the industry there as resilient. I
Yeah.
guess it has to be in this environment geopolitically, doesn't it?
Sure, yes, but again, it's not the case everywhere. So when you take a look on the last 20 years, and especially when you see the 2008 and 2009 crisis, you can feel, oh, what's going on? And finally, almost 10 years back, you can see that the people that have been able to go through the crisis and to continue to provide good return are the ones that were able to be very strong, to stay on their strategy, and again to focus on the good quality. The best answer we can have towards a difficult market is to buy quality. And we believe that with the entrepreneurs, the CEO, the strong CEO of the companies, with a good business, this is where between private equity investors and those entrepreneurs, you can match the opportunities, and you can definitely have a value added and continue to invest in good condition. But again, you have to be very cautious, you have to be strong, and you have to stay in your strategy to make sure that you can deliver.
So there are quite specific structural models, if you like, for the success stories you see.
I think, good manager, good company, good quality, that's again what you are able. Of course, you have to be reasonable. The use of debt, for example, is always an issue because it's always a discussion, it's always a subject. And if you are using again the debt in a good condition for good assets, you can deliver, but it has to be as well checked. Pre-crisis, it was probably the issue where you could find debt on good quality company, but as well debt on average or bad companies, and that's where finally people has been able to learn and maybe to change and make sure that now when they put a little bit of more debt, it's on good company, good quality companies. That's the market, that's the change that has been able to occur, and that's why today we believe that the good and the strong manager are able to provide this type of debt. Now, it's quite diversified, and you have as well, if you are LP, if you are investing in a fund, you have to be very selective, and that's typically the type of things you have to check before to invest in a fund.
You talked there about good managers, you mentioned people lots, that word in your last answer. That's the key, and retention of good people.
Yes, and it's part of Ardian. Before to speak about finance, before to speak about debt, before to speak about anything, it's about first people. And we believe in people, and private equity, it's about people. People in good business. And if you don't have the right people, even if it's a good business, you will not be able to deliver the return to your investor. So for us, it's before everything people, and then trying to find the right business attached to the right people.
And even more so at the moment, where perhaps local knowledge in different markets and geographies is really important.
Yes, so again, I think, and we know what it is because within Ardian we have this organization where we are active in direct, in buyout, and We are active in France, we are active in Germany, we are active in Italy, we are now active in Spain and in the UK. And we want to have local people. We want to have German people able to speak with a German entrepreneur, because otherwise it will be not the same. And again, question of people, you need to know the people you will work for the next 5 or 6 years. And so the local presence is very important. And this is the case for buyout, this is the case for fund of fund business, where we have offices everywhere in the world. This is the case for infrastructure. So private debt the same. So that's really, we think that the local presence is very important. We have 12 offices in the world today, and if we need, we will open more offices to make sure that we are close to the people we will invest with.
And interesting times ahead too, because we have more Euro elections in 2017, so it's not going to get any easier, if you like, the landscape, is it?
Well, you know, take a look. We've got the Brexit. A lot of questions about the US election. Next year, of course, some election in Europe. So I think the market now try to be cautious, but at the same time try to anticipate. And the same for us. We try to be cautious. You have this type of events that are not completely expected, or that are turning the way you are not expecting. So again, you have to be professional. You have to be ready. You try to be ready for that. You cannot be ready for 100%, but to be ready, and again to be focused on what you know, what you are, where you try to be strong. And you know, we have this question. It's part of our when we speak about an investment. It's a key element. But if you have again a good opportunity with a good management team, with a good business, you have to take into account, but you cannot stop everything. It's part of the job. And again, if you have good business, probably you will be in a better position to go through any type of change or surprise.
Watch this space. Benoit, thanks so much for joining us.
Thank you very much.